U.S. stocks posted strong gains during December, with the S&P 500 index finishing the calendar year up 31.5%, its strongest calendar year performance since 2013. Gains during the month were driven by a stronger than expected jobs report, which showed 266,000 jobs were added during the month of November, as well as the US and China agreeing to a Phase 1 trade deal. The deal includes canceling tariffs originally scheduled for December 15th, reducing tariff rates on existing tariffs, and potentially further reducing tariff rates if China makes progress towards purchasing $200 billion worth of US products and services, as well as $80 billion worth of US agricultural products over the next 2 years. The Phase 1 deal is scheduled to be officially signed on January 15th, with Phase 2 negotiations starting shortly thereafter. Foreign stocks posted their strongest monthly gains since June due to optimism related to the Phase 1 trade deal, as well as Japan announcing a fiscal stimulus package worth roughly $239 billion in order to shore up economic growth after a recent consumption tax increase. Interest rates were little changed during the month, resulting in roughly flat returns for U.S. Treasuries and other high-quality bonds. The Fed had its least exciting meeting of 2019, at which they left short-term interest rates unchanged after cutting rates at each of their 3 prior meetings. The Fed also released their interest rate projections, showing expectations for no change in short-term interest rates throughout 2020. 2019 was an exceptional year for diversified portfolios, as nearly every major asset class posted gains during the year. U.S. equities led the way, but even most areas of the bond market were able to generate stock-like returns during the year. After over a decade of strong gains, most asset classes are either expensive or very expensive relative to their long-term historical averages. And as a result, we have much lower return expectations going forward. In this environment, we continue to favor certain areas of the equity market that appear relatively cheap and can provide safe sources of income, such as high-quality value and dividend-paying stocks. Additionally, although interest rates are low by historical standards, we continue to believe high-quality bonds will play an important role in a diversified portfolio as a hedge against any meaningful downturn in equities, further deterioration in economic momentum, or rising geopolitical tensions. Happy New Year from all of us here at STRAT. Thanks so much for being with us during 2019. We're wishing all our viewers a happy, healthy, and prosperous 2020.